There's a lot of people online talking about building a big property portfolio as the way to financial freedom. But what if I told you that the strategy that they use to build their big portfolios are very different to the ones they're selling? I know because I did it. I built a big portfolio. I bought a lot of properties. I used a buyer's agent. I understand the industry. I've seen behind the curtain. So this video, I'm going to break down the strategies, what some of the hidden incentives are, and what strategy they use that's different to what most people are going to be able to do. So first off, what is this strategy? Well, it's where you probably heard this story before. Start quite young, you buy investment property number one, you use the equity to buy another one, and then you buy another one using the equity from the second one. So you've probably seen this story before, right? It sounds pretty familiar. But the problem is, this strategy isn't an infinite money glitch. You kind of hit a limit. You hit a point where you can't keep borrowing. It doesn't keep scaling. Now, let's say you've got a 100K salary. That means the bank is going to lend you. We'll make this up. We'll use rough numbers because I don't know what they're using at this point in time for exact numbers. But let's say you can borrow $1 to $1.5 million. Now, you can buy all the properties with the greatest yield in the world, but they're still going to discount the amount of rent coming in, and they're going to increase the rate. They're going to increase and inflate your expenses just to make themselves a bit safer, right? So that means you're going to hit a limit. Now, you can go to other banks and some will have different lending criteria, which is great, but there is a limit. So for most people, unless this changes drastically, the amount of money you bring in from an outside source, aka your job, this isn't going to get much higher. So you're going to be limited. So let's say you use that 1.5 and these are all 500K properties. You got 1, 2, 3 equals that, or you can buy one big $1.5 million house. Doesn't really matter. The bank doesn't really care. What they care about is your serviceability. How much can you borrow? So how do these guys that have the 20, 30, 40, $100 million property portfolios keep seeming to be able to do it? Well, they've got a secret that you don't know about. And that is that they turn from property investor into business owner. What happens is they start out with this. Say, I work my job at McDonald's or wherever. And then I got to this point and then I quit my job because my portfolio was doing so well. But what do? They became a buyer's agent or a guru or whatever. Now this opens up, books, content. It's like YouTube. It opens up BA fees if you open a buyer's agency. Now people will pay you to source them properties. And then courses or coaching. A little bit less common, but it's a thing. But this is the thing I want to really drill into, because if you start a buyer's agency, this is a great model. It's an excellent business model because if you think, what's the average BA fee, right? BA fee could be 15 to 20K. Sorry, my handwriting on a whiteboard is terrible. You'll have to excuse me. But 15 to 20K, let's say you have 100 clients. Let's say you have 100 clients. They're paying you 15 to 20K per property. And let's assume they only buy one each. But a lot of the time, as we know, they'll get you to buy, 5 to 6 to 10 properties reasonably quickly. But this BA fee times 100, you're at 1.5 to 2 million. To $2 million in net rev. Now let's assume a 30% margin. You're looking at 450 to 600K, assuming they're the sole owner and that's their profit margin. Now that $450 to $600,000 is what they can then use, which is more than the salary they had before, right? And it's more than what most people will have. And that's even a conservative sort of estimate. Some buyer's agents that I know have talked about, doing 20,000 properties over their time. So divide that by 10 years, that's 2,000 properties, times that by 15 to 20K per property. Spoiler alert, that's a lot of money. I'll let you do the math. But that's a lot of money that you can filter from here of profit back into investing. So That's a great business model. But here's how the loop looks. So you start off investing, but then you start making content about it, about what a genius investor you are and how brilliant you are for buying a bunch of properties and buying the right ones in the right suburbs because of my expert analysis, whatever your edge is, which then you use to get clients because people go, hey, I want to invest. I want to get some property. How do I do that? I'll go to you. You seem to know what you're talking about. So then the clients bring in income. Oh, can't write. Which then you filter back into investing. So the problem that I have with this is not that, they've got a great business model and they're investing their profits. That's all really financially sound sort of stuff. The problem I have, and the thing that I think you need to watch out for, is the fact that none of them are talking about how, I'm just actually really glad I started this business. I'm a really good business guy. Everyone should start a business because that's how you actually get ahead in life. It's, oh no, I've just got the secret sauce. I know how to do investing, and the property portfolio has allowed me to retire and, retire and blah, blah, blah. But you're actually also running a business that is making you, I'll rub it out, but a lot of money, right? So you're using the content to say, hey, I'm a genius investor that's got a lot of property. Come be my client, pay me more money. You give them money, then they reinvest that money into more properties, which, see how that's a virtuous cycle. The other thing that they have access to that you don't is they've got business structures, right? So they can have a holding company and an investing company, and then lend the money from the holding company to the investing company, and they don't have to pay tax on that, right? So they obviously pay your initial business tax, but that's not you paying 50% of your income and then investing with the rest. It's, hey, you're paying 30% and then investing all of that, and they're not having to pay the personal tax rate. So it's just a lot of advantage and a lot of advantages to having a business that they have, that then they sell the dream of getting lots of properties. Now, this isn't to be overly negative on buyer's agents, but it's just to be aware of the incentives in the industry. So the big watch-outs are, what are the incentives, right? Because incentives dictate everything. The more properties they sell you, the more BA fees they get. So they're obviously incentivized. More. They're not going to tell you, hey, maybe your risk profile, maybe your salary level, maybe your job carries more risk. So maybe one or two good investment properties that you pay off sooner is better. And then just have the cash flow. They're never going to be like, get two good quality properties and live on the cash flow. They're not going to say that, right? Because they need more and more and more BA fees. They will get you more and more. So that's just an incentive. Now, don't get me wrong, I'm not saying they're all going to do this. It's just, that's what they're incentivized to do. So question the incentives and think about, is it really worth it for you? But yes, they're incentivized to get you a good deal as well, because, if they just gave people terrible deals, they probably wouldn't have many clients. But at the end of the day, that is the incentive. It's something to be aware of. Let's go through the pros and cons of using a buyer's agent. So pro, you might be time poor. You work hard for that salary and you don't really have the time to be pouring through real estate listings. You've also don't have the time to be on the phone all day, every day to real estate agents, waiting for the right deal with the right price. You don't want to be plugging in all this data into different spreadsheets for all these different properties to be trying to get the right cash flow yield, upside for capital growth. You don't want to be doing analysis on towns that you don't even live in or never even heard of. So I understand that's where it can be a really good thing to use a buyer's agent. They understand they have access to industry deals and real estate agents that you don't know. They're more acquainted with different areas and they transact a lot of property. So their real estate knowledge on what is and isn't a good deal is quite high, to be fair. So that's good. They also have knowledge, can get good deals because of the networks. They have good networks and can get good deals. Now, on the good deals front, like I've used buyer's agents to buy a lot of my properties, pretty much most of my properties. And one of the things that can happen, and this was a really good one, was I bought one, I put 30K down, and I got, within 2 weeks of settlement, I had valued it for $60,000 more than what I paid for it. So then I could redraw that equity, and I went into another property on Surfers, in Surfers Paradise on the Gold Coast, and I then sold that 10 years later and made something like $250,000 profit. So with that turning that 30K into 250K, that's not a bad return. And I still have that original property. So if I sell that for more profit, then that 30K has become more profit yet again, right? So that can be a really good aspect. I wouldn't have found that deal had I not gone through this particular buyer's agent. So it can be a really good thing. But let's talk about the cons. Now, some of the cons of a buyer's agent are, I think the industry is getting saturated. There is too many out there now. It seems that, every man and his dog's a buyer's agent. They literally had a convention for buyer's agents. It's like, hey, let's all talk about the industry. It's like, how many of you guys are there now? There's a lot. And they've each got their niche, whatever. Point is, there's a lot of them. And the more people you have trying to scramble for all these deals, then the less deals there are, right? If there's more competition in the space for good deals, are you really going to get the best deal? That's just my question. Also, are they making brilliant decisions, brilliant trades, brilliant deals, or does a rising tide float all boats? And what I mean by that is we've just seen unimaginable property growth we would never have thought. And the GFC, when I started buying property, everyone was saying, oh, there's a bubble, it's going to burst, you're going to go broke. But what happened? We had a massive boom. You could have bought basically any property and you would have made money. So I question how important it was to use a buyer's agent, because I could have just bought anything and probably would have had heaps of money. Where they do help out a lot is getting bigger faster. So they do get bigger faster because they can get you that quicker equity. Whereas if you're buying off the plan, then it's going to take you a lot longer because you're paying more for the property. So therefore you've got to wait longer for the capital growth to outstrip the overpayment that you originally made. But now same could be said for the buyer's agent fee. So unless you're getting a very good deal that incorporates the buyer's agent fee, yeah, you've got to just weigh that up. But my point on rising tides is that, yeah, you basically could have bought anything in that time and you would have made a heap of money, right? So, and the last con that I think we don't talk about, no one's really talking about, I don't think, is if you are going to go down this path and you're going to buy as many properties as you can afford, as the buyer's agent puts in front of you, this can be really good, right? But big portfolio means big BA fees. So if you think about that 15 to 20K BA fee, and you compound that across your 10 to 15 properties that you want to buy, that's a lot of money. That can be 100 to 200K. Let's say you're doing 20 properties or 10 properties at 20K. That's 200K that you could be investing in your own portfolio, that's going to compound for you. That's not compounding for them, right? That's 200K that could go back into your pocket. Now, the other thing is you're probably capitalizing that and getting debt on that, right? Because you're folding that into the mortgage of the next one. So if you get the equity out, you're then borrowing that money from the bank. That goes towards the buyer's agent. So then you're paying a buyer's agent fee off for 30 years. So that's double that basically. So that 15 to 20, that's 30 to 40 grand that you're going to pay over the time because you're going to add the interest of that built into that portfolio. It's just something to be aware of. Is it worth it? Because you're then going to see huge amounts of capital growth if you have a big portfolio, right? As I always say, making 100K on one property is nice, but making 100K on 10 properties makes you $1 million. So you do get that capital growth at scale when you buy that 10 to 15 plus properties. However, that's a lot of BA fees. Now, if you were invested in shares and ETFs, something that was low cost and low fees, then all of that money goes back into your pocket, into your portfolio that feeds your compounding growth. So that's just something to be aware of. And I think it's something we don't talk about enough. Overall, do I think buyer's agents are bad? No, I think you need to be able to pick a good one. I just think we need to talk about the incentives of the industry. They're always going to be incentivized to make you get more properties. They're never going to say, hey, you've got enough, just chill, pay that down, and now you've got a property portfolio. They're always like, buy more, more, more. The other thing is the more properties you buy through a buyer's agent, the more BA fees you pay. The higher that is, the less money that you've got capital growth. Think about that 200K. Imagine if you had 200Ks invested in the share market. That's a lot of money. and that does compound for you. And that's starting to get to the point where compounding really takes off in an exponential way. So just weigh it up. How much is that property going to increase in value, and how much is it worth it to you? Leverage versus freedom and control. Uh, it's going to depend on what your plan is, what your strategy is. And, I just think we need to talk about the pros and the cons and be completely upfront, because I think there's a lot of people that just say, buy more, 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 and then don't really tell you the downsides. So this has been my breakdown of particularly buyer's agents, but the real estate industry as a whole, and how most people don't hit the size that a lot of the property influencers do, and how they're able to do it. But if you want to see why I'm deleveraging and actually scaling back my property portfolio, watch this video here. Thanks for watching.